Namaskar Gurukulians, how are you? I hope you all are fine and you are doing your study along with me, along with your videos which I am sending you on the daily basis. Today we shall start chapter 4, methods of calculating national income. Macroeconomics, methods of calculating national income. Today we shall discuss about the theory of this chapter and I will tell you the steps how to find the national income by the various methods. And in next lecture I will tell you the practical and numerical example that you will do in your notebook and I will send you in PDF a number of questions to be solved. Okay, methods of calculating national income. Second chapter you have studied about the basic concepts and the third chapter you studied about the aggregates of national income. Aggregates of national income, we did so many things. How will you go from gross to net by minus depreciation, and how will you go from factor cost to market price? I already told you, when you are producing something, it means there is no addition of tax, and when you are going to market, addition of tax will be there. So by the various angle and the various methods, we will measure the national income by three ways. The first way is value added method. Second method is income method. And third is expenditure method. I will tell you these methods step by step, and how will you find? I will tell you the steps. Firstly, I am going to tell you the meaning in related aggregates. National income. The symbol of national income is NNPFC. I am telling you the complete form of this: net national product at factor cost. It means when you are going to find national income, they will not give you the NNPFC. You have to understand yourself by at your own level that you have to find NNPFC. The steps I already told you. How will you go from gross to net? How will you go from domestic to national? How will you go from market to factor cost or factor cost to market? Today I am going to start your first method, that is value added method. Value added means, as the name suggests, value addition will be there. Value addition will be there. What you will do? You will convert the raw material into finished goods. It means value added is there. Okay. So firstly I am going to start value added method. Value added means addition of value. Yani ki what you have done, you have taken raw material and convert it into the finished goods. So I am telling you the definition of value added method. It measures the national income in terms of value addition by the each producing enterprises in the economy during an accounting year. Two names are also there. First is industrial origin method and net output method. Industrial origin method and net output method. Here output means production. Production is done by the producers. There are some steps to find the national income. First step is identify various sectors. Identify various sectors. What do you mean by various sectors? There are three types of sectors: primary sector, secondary sector and tertiary sector. Primary sector, it includes agriculture, others. Secondary sector, it is a manufacturing sector that will convert raw material into finished goods. For example, sugarcane is using to make sugar. It means that is manufacturing. Third is tertiary sector, that is for services. If any one sector is not here, the work cannot be worked easily. For example, if we are getting something from agriculture, then what we have to do? We cannot eat raw sometimes. We have to add some more value. It means manufacturing, secondary sector. If tertiary sector is not here, then insurance, banking, transportation will be not here. It means that product will be in the factory, that will not go to the destination, final destination where it have to reach. What it mean? अगर प्राइमरी सेक्टर, टर्शरी सेक्टर, सेकेंडरी सेक्टर, इसमें से कोई भी एक सेक्टर जो है वो काम नहीं करेगा तो क्या होगा? इट मीन्स कि जैसे आई एम गिविंग यू एग्जाम्पल ऑलरेडी कि टर्शरी सेक्टर सपोज अगर नहीं होगा तो जो प्रोडक्ट्स हैं वो बनकर वहीं की वहीं पड़ी रहेंगी. इट विल नॉट गो अदर प्लेसेस. नेक्स्ट I am telling you the method. The second step is calculate GVAMP in all sectors. Calculate GVAMP in all sectors. Here all sectors means primary, secondary and tertiary. The same is there. The formula of GVAMP means, I am telling you GVAMP. The formula is value of output minus intermediate cost. Intermediate cost, intermediate consumption, purchase of raw material, non-factor cost, all are same. This is the value of output minus intermediate consumption or intermediate expenditure. What is the mean of this? इसका मतलब क्या है? This is GVAMP, gross value addition. आपने क्या किया है? What you have done? You have increased the value. For example, you have taken wood of 10,000 and make the furniture of 20,000. It means value of output is 20,000. Or wood you have taken of 10,000, that is intermediate consumption. Okay. The formula of value of output is sale plus change in stock. And what do you mean by change in stock? Closing stock minus opening stock. And the third step and final step, I am telling you, listen it carefully. After that you will find the final conclusion. What is it over there? GVAMP. The another name of GVAMP is what? GDPMP. This is GDPMP. Another name of GVAMP. What is GDPMP? And where you have to go? You have to go in national income. And the symbol of national income is what I told you, that is NNPFC. How will you convert these values into national income? This is NNPFC. I am telling you the another gross domestic product at market price. And next is net national product at factor cost. In previous lecture, I told you how will you go from gross to net? By deducting depreciation. Okay, you will convert it from gross to net. First step, how will you go from gross to net? Minus depreciation. Okay, domestic to national. How will you go from domestic to national? By adding net factor income from abroad. Formula to find net factor income from abroad: factor income from abroad minus factor income to abroad. Next is product. Product same, final value of goods and services, market price to factor cost. Market price, it means it already added net indirect taxes, and where you are going at factor cost. When you will go from market price to factor cost, net indirect taxes will be deducted minus net indirect taxes. Formula to find net indirect taxes, that is indirect taxes minus subsidies. Okay, now you can find national income by which method? Value added method. I am going to recapitalize again. You have to listen it carefully. First, identify various sectors. What are these sectors? Primary, secondary and tertiary. I already told you about these sectors. You know about these sectors because you have already done in class 9th, class 10th in economics. Second step is calculate GVA-MP in all sectors. The formula to find GVA-MP. What do you mean by GVA-MP? Gross value added at market price. The difference between market price and factor cost I already told you. I hope you can understand in that chapter which I told you and use that terms in this chapter. Gross value added means value of output minus intermediate consumption. Value of output, it means sale plus change in stock. What is change in stock? Closing stock minus opening stock. Next, gross domestic product at market price, it is another name of what? GVA-MP. So, how will you convert? We shall convert gross to net minus depreciation, domestic to national by adding net factor income from abroad and MP to FC minus net indirect taxes. The formula to find net indirect taxes minus subsidies. Okay beta, I am giving you the example of one practical question of this. Okay, I am telling you the practical question, but firstly I am going to tell the precautions of these methods, because some precautions you have to keep it in your mind if you are going to solve this question. After that we will do double counting. Okay, this is the problem of this method. Main problem is double counting. What is the double counting I will tell you, but firstly I will discuss about this. Add the national income of all sectors. All sectors की क्या करेंगे हम? Add कर लेंगे different income, and that will be the national income of the economy. This is the value added method. Firstly I am going to tell you about double counting. What is the meaning of double counting? We will do it with the particular example. Double counting. This is very important question. Double counting means count the thing more than once. That is known as double counting. What is the example? What is this? It is the value of final good produced in the economy. One is likely to encounter the problem of double accounting. What do you mean by double accounting? It means counting the good more than once. किसी भी चीज़ को एक से ज़्यादा बार काउंट कर लेना, that is the problem of double counting. This is a very big problem. I am giving you one example. After that I will tell you. Suppose a farmer grow cotton. Rupees 1000. Okay. Now it gets from the primary sector. Now it will goes to other sector and convert it into thread. The value being rise, that is 1200. By thread it will convert it into clothes. What? Value increased, that is 1500. And last is shirts. Rupees 2000. That cotton included every place. It means problem of double counting. That cotton includes here also, here also, here also. Because that cotton convert into thread, thread convert into clothes, clothes convert into shirt. The same example I can take one more. We were discussing about the double counting. I told you the meaning of double counting. I am giving you one more example of this, that is wheat, flour, bread. Wheat. A farmer produce wheat, convert it into flour and give it to the baker. Then the value of bread is 1500. Double counting, this is a problem. This is a problem. To avoid this accounting, इस counting को क्या किया जा सकता है? रोका जा सकता है. If there is any problem, solution is along with them. Every time you will see, if problem is there, solution will be also there. I am telling you the solution and I am telling you how to avoid it. Beta, before 1 year this question came in 6 marks. And what you have to write? Firstly you have to write the definition. Secondly you have to write the example, and last point is how to avoid these. You can avoid these double accounting by using two methods. One is value added method. If you will use value added method, you can avoid this, you can solve this problem. And what is the value added? I told you already, value added means value addition. Which value you have added? You have added more, that is known as value addition. For example, what farmer has purchased? Farmer has purchased seeds. Farmer ने क्या purchase किए होंगे? Seeds purchase किए होंगे. Maybe he get at a subsidized rate, free of cost, and he produced what he produced. He produced a cotton of rupees 1000. I am taking the complete value of rupees 1000. Secondly, convert it into the thread. It means how much value is added? Value is added of 200 rupees. This is a difference. Then thread convert it into the cloth. Convert किस में हुआ? Cloth में हुआ. Which value is added? The value of thread is 1200. The value of cloth is 1500. It means rupees 300 is added more. And the last one is, by making shirts, we added its value by rupees 2000 minus 1500, that is 500. It means the value is at the more 2000. First method is you can take value addition, and second method is you can take the final value of output. The final value of output is rupees 2000. If you are taking final value, it already includes all these values. If I am taking the value of shirt, it already included cotton value, thread value, cloth value. Okay beta, there are two methods by which you can avoid these. Okay, the same you will apply in wheat. I am telling you, first is value added method. How will you find the value addition? Value addition means that is 1000 plus 200 plus 300, that is 1500. And second is final value of output, that is 1500. So there is a no problem in double counting. You can solve it, but you have to keep in your mind, you can use by this two method. If you are taking the final value, no need to take other values. If you want to take value addition, then you will take value addition is done by using the raw material. Okay beta, double counting can be avoided. I already told you double counting can be avoided. I am writing over there. How can it avoid? Double counting can avoid. It can avoid by using two methods. One is final output method. Final output method means by taking this example, you will take complete value, that is rupees 2000. This is the value of shirts. And second, what you will do? You will take value addition method. Value addition means which value you added, that you will take. So first value 1000, second value 200, third value 300, that value 500, that is 2000 rupees. Answer will be the same. Okay beta. Now I am telling you the precautions of this methods. Precautions. Precaution means savdhaniya. If you are using value added method to measure national income, which precautions you have to keep it in your mind? I am telling you small precaution. First, avoid double accounting. I already told you the concept of double accounting. Second, sale and purchase of second-hand goods is not counting. Why it is not included in the national income? Because its value have been already added when it was purchased, when it was produced. जब ये क्या किए गए थे? These were first hand. जब ये produce किए गए थे, that value is already added. That's why we will not take it again, because this is second hand goods. Third is self-consumed output to be included. Self-consumed means जो हमने खुद consume किया है, that value is already added. It means produced through economic activity. For example, my father is a farmer and he is producing a lot of wheat and keeping 1000 ton for their family distribution or them. For them, हम अपने लिए ही जो है वो उन्हें रख रहे हैं. तो what we shall do? This value will be added because this production is done in the economy. Change of stock to be included. I already told you sale plus change in stock, as this is a part of capital formation. I am telling you imputed value. What do you mean by imputed value? It means unoccupied. जो चीज़ आपने अपने लिए ली है, like unoccupied houses. Suppose मेरा अपना घर है. Is value also included in national income because these have values in the market. क्योंकि इनकी वैल्यू जो है वो मार्केट में कुछ ना कुछ ज़रूर होती है. Next method is income method. I hope beta you can understand it easily and can solve the practical question. I am telling you about one practical question also. I told you precautions. By taking that precautions, you have to solve that practical question. Okay, beta? I am telling you. In this year also, one question has come. That the question is find the value of change in stock. That question came in 3 marks. Okay. I am telling you one question, and what you have to do, you have to solve along with me, that then you can understand it easily. I am giving you one question, that is, first part is given purchase of machinery. Your question is find net value added. What you have to find? Net value added at factor cost. It means you have to find firstly gross value added, then minus depreciation, then you can find net value added. Statement I am writing on the board. Purchase of machinery. Purchase of machinery. Then sales. Then intermediate consumption or intermediate cost. Then indirect taxes, change in stock, excise duty. Indirect taxes, change in stock, excise duty. Amount I am telling you, and after that stock of raw material. Stock of raw material. Amount you will write, that is in rupees, in crores, in lakhs, which is written in the statement. You will take the same. First is 100, 200, then 90, then 12, 10, 6 and 5. What you have to do? You have to find NVAFC. In value addition method, I already told you the formula is sale plus change in stock minus intermediate cost. Okay. Now you will do by using your method. First step is find GVAMP. Formula is sale plus change in stock minus intermediate cost. Sale, you will find the sale, that is 200. Then change in stock 6. After that, उसके बाद minus intermediate cost, and you will find the intermediate cost, that is 90. Now you will find GVAMP. What is the GVAMP? 200 minus 90, 110 plus 6, 116. Now our question is to find NVAFC. NVAFC. From gross to net minus depreciation. You will see is depreciation here. You will see intermediate cost, indirect taxes, change in stock, and excise duty. Nothing is here. It means that will not use. And MP2FC. MP2FC means minus net indirect taxes. And net indirect taxes, it means indirect taxes minus subsidies. Indirect taxes, I have 12. And subsidies, I have no subsidy. So net indirect taxes will be 12. I think no more value is here. Okay, here change in stock is given 10 or by 6, it's okay. Then the answer is, what you will do? MP2FC, that is 1, 0 and 4, because excise duty is also given, but that excise duty, what you will do? You will take in indirect taxes. It is already added. Indirect taxes already included excise duty. Okay beta, by step you will go. Sale 200, change in stock you have taken 6, that is 206 minus 90. What it will be? It will be 116. Then where, what will we do? Minus indirect taxes, and indirect taxes of rupees, how much is given? That is given 12. And what you will do? 12 minus 0, net indirect taxes of rupees 12. Then MP2FC, where you will come? MP2FC, जब MP से FC में आएंगे, what we shall do? Minus net indirect taxes, and that net indirect taxes will be deducted. Then you will find the value of NVAFC. Now I am telling you the next method, that is income method. Income method, we are going to start. Income method means that method in which you will find the national income by the various sum total of factor income, that is rent, interest, wages and profit in the territory of a country during the period of an accounting year. So I am telling you the name of income method is distributed share method or factor payment method. Income method or distributed share method or distributed share method, and next is factor payment method. Factor payment method. As the name, income is here, so it is a sum total of factor income. You will find the NDPFC by adding net factor income from abroad. You will find the NNPFC. So it is estimated in terms of factor income, rent, interest, profit, compensation of employees during the period of an accounting year. By adding net factor income from abroad, you will find the national income. So I am telling you by the income method, classification of factor income. Classification of factor income. It is divided into three parts. One is compensation of employees. Second is operating surplus. And third is mixed income. I am going to tell you the meaning of these. Compensation of employees. एक एम्प्लॉय को किस किस तरीके से कंपनसेट किया जाता है. What are the ways to compensate him? First, wages and salaries. First, wages and salaries. This is a type to give him in a cash. Wages and salaries. Second, employer contribution to social security scheme like PF, employer contribution to social security scheme like provident fund. Provident fund of two parts, two types. One is employer contribution to social security scheme. Second is employee contribution. Employee means he is working over there, his salary is deducted by his own part, but which part is given by the employer, who is your owner, that will included in compensation of employees. If employee part is given, that you will not add it because it will create a problem of counting. Third, payment in another kind like rent free houses. And fourth, last one, pension on retirement. When a person will retire, he will get pension on retirement. Two type of pension we will discuss in economics, old age pension and pension on retirement. Both are different. Old age pension is given to everyone. This is given by the government. That is a transfer payment or transfer income for the people, those who are getting. And pension on retirement, that is a factor income because you are giving services, that's why you are getting. Not everyone is getting. Who give their services to them, the same person will get. Operating surplus, that is by operate. This income is known as income from enterprises or property. For property you will get rent and royalty, then interest, then profit. Profit is further divided into three parts, that is dividend, corporate tax, and corporate saving. Corporate saving means this can be known by two more names. That money is kept by you in saving, that is undistributed profit. That can distribute it in the partners, but it is not distributed, it is saved by them. That's why it is known as undistributed profit. And retained earning. Retained earning means which he will use again in the business. So that is known as a saving. And next is mixed income. Mixed income means milli-juli income. For example, a person is working in a school, he is getting salary. By home he is giving tuitions, he is also getting money. Maybe he is working on any other site, or his property is with him and given on rent. So such type of income is known as mixed income, milli-juli income. By adding these three, compensation of employees, operating surplus, mixed income, you will get NDPFC. By adding these three, NDPFC, because this income is generated within the domestic territory of a country. Rent, any property you have given to anyone and taking rent. Royalty, for example, you have a you can say that कि mine खान है आपके पास, you have given on rent and you told them कि which coal you are extracting from that mining, on that you will take commission, that is known as a royalty. Or on book publishing also get the royalty. This is also a type of rent, you can say. Interest on capital you will get. Profit entrepreneur will get. Ab entrepreneur will get, it means dividend. Dividend, you know, dividend in accounts you are already discussing about the dividend. Dividend is a part of profit. Corporate tax, tax you have to pay, it is a compulsory payment which you have to pay. Corporate saving, saving is the necessity. If you have not saving, you cannot retain it again. So this is known as income method. NDPFC, net domestic product at factor cost, and you will add net factor income from abroad here. It means you will get NNPFC, that is domestic income. By adding this you will get national income. There are also precautions of this method, like I am telling you 1-2 precautions with them. If you are taking compensation of employees in numerical, no need to take the other terms, it will create a problem of double counting for you. If you are taking profit, no need to take other terms, it will also create a problem for you. Okay beta. Next, precautions, I am telling you, transfer income to be avoided. I already told you this thing, old age pension and retirement pension. Retirement pension is a factor income, but old age pension, what is it? It is a transfer income or transfer expenditure for the government. Capital gain to be avoided. Capital gain, these are not production transaction. कैपिटल लगाई थी एट विच यू गॉट गेन, तो इससे कोई भी जो है वो क्या नहीं हो रहा है, प्रोडक्शन ऑफ फ्लो ऑफ गुड्स एंड सर्विसेज नहीं हो रहा है. फाइनेंशियल ट्रांजेक्शन टू बी अवॉइडेड. फाइनेंशियल ट्रांजेक्शन लाइक सेल ऑफ शेयर्स, bonds आर नॉट बी इंक्लूडेड. जस्ट दीज आर ओनली अ टाइटल पेपर दैट विल नॉट डू एनी प्रोडक्शन एक्टिविटी इन द इकोनॉमी. Next is income from sale of second-hand goods to be avoided. I already told you this is already, but you have to do, no need to count it because it is already counted when it has been produced. But the commission on sale on second-hand service, sale and purchase of second-hand services, that will be counted because that is a reward for that person for their hard work. Next is windfall gains are to be avoided. There is no production activity. Tax not to paid as they are transfer income. Okay beta, I hope you can understand these two methods easily by using these terms, income method and value added method. And problem of double accounting you can easily understand by this video lecture. If you are facing any problem, you can take this problem on WhatsApp. In next video I will bring the new topic for you, that is expenditure method and numerical terms of these. Thank you beta, thank you so